All right, guys, welcome back to another video. A couple people have asked me if I could start doing weekly breakdowns on the markets, what the economic calendar is doing, what it actually means, how it affects gold, indices, and how I'm forming my bias going into the week. So I know this one's a little bit late, coming out on a Monday, but pretty busy this weekend, and this is the only time I could really get to it. So in this one, we're going to be going through this week's economic calendar and talking about each release, all on Forex Factory, why it matters, and then I'll pull up the charts and show you how I'm going to interpret this, everything in real time. Let's jump into it. So today on Monday, December the 8th, we had a no news Monday. And for me, I'm really not even looking at the markets because if there's no volatility, there's nothing for me to even trade specifically, not even on an intraday basis, let alone a swing trade. There's a couple notable things like the US announcing that they'll be selling NVIDIA chips to China, which NVIDIA has shot up a little bit, but nothing too crazy. I think that's good for obviously tech and the Qs, but other than that, not a whole lot to look at. Specifically this week, we have a crazy bunch of red folders, and this is going to be a massive week for the markets in my eyes and the current gold trade that we are still holding. So with a no news Monday, we're going to jump straight into what's going on Tuesday. So Tuesday is kicking off with two really important labor market indicators. We have the ADP employment change and the JOLTS job openings, and together they actually set a tone for the entire week for me. So the first thing, ADP employment change. This tells us how the private sector hiring is trending. And the reason this matters is because if we have a weak ADP, that means the labor market is softening, which makes the Feds more dovish, which means the US dollar weakens, gold strengthens. A strong ADP means the labor market is still tight and the Fed stays cautious, and the US dollar strengthens, gold cools off. Think of ADP as your first signal of, is the job market slowing or holding? Then we have JOLTS job openings, and this measures how many jobs are actually available. The Fed loves this number because job openings drive wage pressure. If the JOLTS come in lower, that means there's fewer openings, which is wage pressure easing, which means inflation is cooling, bullish for gold, obviously. If JOLTS comes in above, that means tight labor, wage inflation risk, the Fed's more cautious, gold will slow. So Tuesday is basically going to tell you how stressed or relaxed is the labor market. All right, and Wednesday is the heavyweight. This is where the real macro story is going to come in hot. So first of all, we have the employment cost index, and this is one of the Fed's favorite indicators because it measures wage inflation directly. If this is up, that means wages are rising and inflation is sticky, which means the Fed could be nervous. If ECI is down, wage pressure is easing, inflation is cooling, and rate cuts are more likely. Most traders ignore this one, but it's genuinely one of the most important and powerful ways to read the market. Now the big bad FOMC. This is the one that really sets the tone. If rates stay the same, the FOMC tone is what really moved the markets. And this is how to read it properly. If there is a dovish tone, mentions disinflation, acknowledges a slowdown, or hints at future cuts, gold will pump. If there's more of a hawkish tone, meaning there's mentions of inflation risk, focuses on labor tightness, or higher for longer language, gold will stall. The market trades the tone, not exactly the number. And then on Thursday, we have unemployment claims. Now, this is also a really big one for me personally. Thursday is when the market either confirms or contradicts the narrative that we've built earlier this week. Unemployment claims give us a weekly look at layoffs and unemployment momentum. If claims are rising, that signals the weakening economy, which means gold is bullish. Unemployment claims falling means the labor market is holding firm. Gold could slow. This number often determines whether the week ends with a continuation or a reversal of what's going on prior to this. The yellow folders that are spread out through here aren't individually huge risk, but they do stack. They could help us lean towards the macro bias of clearly bearish or clearly bullish, but overall they don't mean as much as these massive red folders, especially the ones that we have coming in for this week. So obviously, what does this mean for gold and the indices? And this is the part that actually matters for most traders, including myself. All this data tells us one story. Is the US economy cooling or holding? And that determines USD strength, bond yields, rate expectations, gold, and index directions. Now, the really simple version of this is if the USD weakens, yields will fall, rate cuts get priced in, gold could go bullish. If the data comes in very strong, that means the US dollar strengthens, that means gold could soften and indices could have a bit of a run. Everything comes back to the Fed, balance inflation with economic health. And funny enough, this week's calendar really does give us a full read on all of that. So based on everything I just said, how does this affect the markets, specifically gold and indices and the current trade that I'm in? So how does everything I just said play out on the charts? Like I said, I'm in a gold trade still. I'm not in any active trades on the indices, and I'm not really too focused on them right now. I do think gold will be the biggest driver in this case that we have right now. Like I said before, we did take a big profit right here at this area of interest, and we let the rest of the position continue, and we are fully break even on the trade, especially when we have a big week like this. With a big week like this, we could easily have gold have a massive candle go straight into our SL, so I am not really going to risk this, and I'd rather play this a little bit more safe. I did want gold to be a little bit higher when we came into this week, just because I would have liked to have kind of that breathing room to endure all this data and then continue to the upside. Personally, I did want to be positioned for this week way before it happened. So I've been in this trade since November 26th, and I'm still holding it up to December 8th. I would like to see all of this come in, a little bit bearish from the data perspective, because that obviously means bullish for gold, especially with the rate cuts that have continuously been hinted at from the Fed. That is rocket fuel for gold. In terms of the indices, not very good, but with all the data we have coming in from the overall just markets, it does seem good for indices. So I'm very interested to see how everything else plays out from a data perspective specifically. If we scale into a lower time frame, being the 30-minute right now, you can see that we have been consolidating a lot on gold right now, and we've been kind of trading sideways for a while. We had this high on gold that we broke out from right here, and then we had a massive retrace almost to basically my entry price. We did respect this low a couple times, 1, 2, 3 times now, which does make me a little bit cautious of what the price action is showing me, but we are in a huge consolidation point right here between these two zones. So now it is really going to be a bit of ranging until this data is kind of processed and then priced into the markets. I do think a lot of this leg right here was actually the market's pricing in the possible rate cut. So I'm not exactly sure how this is going to play out until we see the data and how this reflects on the chart. Specifically for me, I am still holding this gold trade because I do think we have a lot of room to the upside still. And I do see us continuing to the upside, especially with all this data coming out and my current read of the economy. Obviously, from a chart perspective, this could go in either direction right now, but at points like this, it is a good thing to have a strong bias, so you always know where you're at in your trade. If I didn't have a strong macro bias and I wasn't paying attention, this would just look like hell to a trader. Me personally, I've already taken profits on this. This is why it's so important to lock in profits at certain points, because I'm free to go for the rest of the time now. I'm not really banking on anything else for the month of December. This is usually a slow trading month, and I pretty much call it halfway through December. There's not going to be much going on through the markets during the holidays, so there's no point in really getting greedy. I would like to see this gold trade continue to the upside, have a breakout, maybe even a retest. I would add to an entry there, possibly to the upside, just because I do like this area of interest that is forming right now. If we did have another bit of reactions off this and we had something of sorts where we reacted off it once more, broke above, retested it, and the macro bias was still strong, I would not be upset adding more to the position and continuing to the upside for a bigger TP level. Overall, that's going to be it for this. Let me know what you guys think, and if you have any questions about the current price action or you want me to dive deep into any of the economic events. But with that, we'll see you guys in the next one.